Hello everyone, warm welcome to Super Coaching Regulatory Bodies YouTube channel by Testbook. My name is Madhav Sir. मैं आप सबका हार्दिक स्वागत करता हूं the next session on finance current affairs. As you all know that we have started with a new series where we are covering the finance current affairs on Tuesday, Thursday and Saturday at 5 p.m. and I will be discussing the entire financial news related to your upcoming examination. So in this particular series, I will be discussing RBI updates, RBI press release, RBI circulars, RBI notifications, RBI bulletin, RBI publications. Secondly, I will be discussing the news related to the financial world, that is banking related updates and updates related to the financial sector of the country. So I'm pretty sure you are going to enjoy this discussion. I'm pretty sure that you are going to learn new things from this particular session, and I'm pretty sure this session is going to help you a lot in order to clear your upcoming examination. So before we start the discussion, may I have a reply in the comment section that I'm audible, visible, everything is fine, and I would request you all quickly share the link of this session with your friends so that more and more students, they can join us live in this particular session and they can get to know that yes, finally the session is live. Shall we begin the discussion? May I have yes sir in the comment section? Shall we begin the discussion? May I have yes sir in the comment section so that we can start the discussion without any further delay. Okay, fine. So today, what all news we are going to discuss, I'll give you an overview. First of all, we'll discuss a very important news, and I would say the news which is viral these days, and many of the students, they are aware and they are afraid about this particular news, that is GST rates have been revised, and recently the GST rates have been revised on second hand car sales, or I would say the sales of these used cars. Second point we will be discussing, public sector banks, they have recorded a huge profit, that is 85,000 crore rupees of profit in the first half of the financial year. We'll discuss what were the reasons due to which this huge profit was recorded, what are the reforms which have been taken in the past, and what are still the aspirations which RBI and government needs to fulfill in order to increase these rates to a next level. So these three areas will be discussed. Moving ahead, we will be talking about the latest appointment of Managing Director and CEO of J&K Bank. Along with that, we'll discuss few more important appointments related to the financial world which will be important for your phase 1 perspective. Moving on to the next news is India. Please pay attention. India to lend $500 million. India to lend $500 million to India for sustainable infrastructure. So if you doubt, so what do you want to say? How India is going to lend to India? What is this news all about? We will be discussing about this update as well in this particular session itself. So let's begin our discussion with the first news. And before we start the discussion, I would let you know one thing which you have been asking in the comment section, that sir, from where we can download the PDF. You can download the PDF of this session from my Telegram channel. My handle is @Madhav Sir. The moment you will type @Madhav Sir, you can find out my channel, and from that channel itself you can easily download the PDF of this session which will help you a lot. So let's begin the discussion. When we talk about the GST, we know that sir, GST rates are decided by the GST Council and they are revised on the regular basis as per the requirement. So recently there was a news that sir, GST rates have been revised on the used cars. Now if you want to sell your car, will you be paying the GST of 18%? That is not the point. What the point is, please pay attention. This has been mentioned that the car dealers or I would say the companies which are involved in the sale and purchase of used cars. For example, there is a dealer. Dealer 1 has purchased a car for 10 lakh rupees and now he is going and he has sold the same car. He has sold the same car for 12 lakh. Now, what is the profit he has earned? So the gap between the selling price and cost price is 2 lakh rupees. So on the profit of the dealer, on the profit of the middleman, GST is going to be charged. Earlier, it was 12% and 18%. It was different for different types of cars, but now 12% mark has been removed and it has been fixed 18% regardless of the car which has been sold. Okay, so let's discuss this point. So GST Council has decided to charge uniform 18% tax on the marginal value of sale of all used cars by businesses, including the electric vehicles. Now you must be wondering, sir, do you think that this news is important with perspective to RBI Grade B examination? My answer would be, there is no doubt that RBI is not going to ask you the current GST rate, but yes, the analysis of this news which I'm going to give you is going to be really very important. What analysis I'm talking about? See, this is the factual part, that earlier it was 12% for certain category and it was 18% for rest of the categories, but now the flat 18% tax will be charged, and this 18% tax will be charged on whom? So it will be charged on the middleman, it will be charged on the car dealers. But the problem over here is, on one side, in order to promote sale of electric vehicles, government has introduced a scheme. Please pay attention. Scheme says, scheme to promote manufacturing of electric passenger cars in India, and in order to increase the production as well as consumption, it was very clearly mentioned that on electric vehicles, GST is going to be 5%. GST is going to be 5%. I'm talking about new car. If you are purchasing a new electric vehicle, on the new electric vehicle, the GST which is going to be charged, so that is going to be 5% only. But if the GST on second-hand electric vehicle is going to be 18% as per the latest amendment, this is going to impact the demand and sale of electric vehicles in the second-hand market. Now you must be wondering, so what I'm trying to say, see, whenever an initiative is taken in order to promote a particular organization, in order to promote a particular initiative of the government, the promotion should not only be done on the first hand part, it should be done on the second hand part as well, because the aftermarket sale of a particular product is really very important, which encourages the buyer to buy a new product. So if GST 18% will be charged on the used cars, that is the electric vehicles included in the same category, it will undoubtedly impact the sale of electric vehicles in the second hand market. And if the sale of electric vehicles in the second hand market is impacted, it will impact the purchase of electric vehicles, which may have a negative impact, on the current scheme, that is scheme to promote manufacturing of electric passengers in the electric passenger cars in India. Yes, this session is more than enough for your RBI Grade B examination. If you're following this session on regular basis, I assure you that you will be in a position to answer most of the questions in your RBI Grade B examination related to finance segment. Is it clear, everyone? Chalo, let's move on to the next news. But before I move on to the next news, I have few important updates which I would like to add in this. The next update is, sir, GST on the second-hand cars or used cars have been discussed. But what is the GST on the brand new cars? If you're purchasing a brand new car, a small car, which has a engine of less than 1200 cc, for example, we have Swift, for example, we have Alto, all these cars, they will attract a GST of 18%. If I talk about mid-size cars with an engine capacity of 1200 to 1500 cc, again, the GST is going to be 18%. Luxury cars above 1500 cc, 28%. SUVs above 1500 cc is going to be 28%. But on electric vehicles, where the cc doesn't matter because there is no engine, they are battery run vehicles, for them the GST is going to be 5%. So I repeat, this is really very important. If I talk about the GST on sale of second hand or used cars, so GST on used cars is going to be 18% regardless of the category, regardless they are petrol vehicle, diesel vehicle or electric vehicle. But the GST on the brand new cars is quite different. Remember that it is 18% on small and medium sized cars. It's going to be 28% on luxury cars as well as SUVs, and it is 5% on electric vehicles. It is 5% on electric vehicles. Got it, guys? Is it clear? Just give me yes, sir. Mamta, Rohit, Rathod, Shrikant Rathod and Kailash. If it is clear, just give me yes, sir, so that I can move on to the next news. The next news talks about public sector banks recorded net profit of 85,000 crore rupees in the first half of the financial year 2024-25. In the last year, if I talk about 2023-24, in the entire financial year, the profit which was recorded by public sector banks was around 1.40 lakh crore rupees, which was highest till date, But this year, in the first half itself, the profit recorded is 85,000 crores, which means undoubtedly the profit for the entire financial year is going to cross a mark of 1.40 lakh crore rupees. Now, I would like to add something to this. What I'm trying to add is, first point, so why profit of the public sector banks are increasing? So the profits of the public sector banks are increasing due to different reasons. First one is public sector banks, they are trying their level best to increase their efficiency. Second, risk mitigation is done very effectively in the public sector banks. Public sector bank is maintaining huge capital to counter its risk-weighted assets. That is a plus point. Secondly, NPAs are declining over the period of time. So these are the reasons because of which profits are increasing in the public sector bank. Second point is why NPA value is declining, not only in public sector but on the entire banking sector of the economy, entire banking sector of the country. The reason is very obvious, that RBI has come up with a number of norms which is helping the banks first to provide loans which has a potential to which has low potential to be declared as NPA, and secondly, there are resolutions, there are a number of initiatives taken by RBI, government and banks to recover the loans which have been declared into NPA. So let's try to discuss all these points one by one. The first is, sir, in the financial year 2024-25, in the first half of the financial year, India's public sector banks recorded a profit of 85,520 crores. We know that in India we have how many public sector banks? And in India we have 11 nationalized banks, 1 SBI. So the total 12 public sector banks have recorded a profit of 85,000 crore rupees, which was 67,000 crore in the first half of the last financial year. In the first half of the last financial year, that means in the first half itself there is an impressive increase of 26%, and the highest profit earner bank is none other than the largest bank of the country, and that is State Bank of India. Moving on to the next point. So the significant achievement is because of what? So this significant achievement is because of few reasons. The first reason is strengthened governance and capital base. So bank has strengthened its governance and capital base, which has helped the bank to increase its profit. First point, how bank has strengthened its governance. So banks have strengthened its governance in the first case, that is key governance reforms. Key governance reform means now banks, they are coming up with very, I would say, strict and detailed procedure for the appointment of heads of the bank, for the appointment of individuals to the highest post of the bank. So as they say, arm's length selection of the top management ensures transparency, efficiency, and I would say the better talent is appointed as the top management of the bank. And if the top management of an organization is effective and efficient, undoubtedly its results are witnessed on the bottom as well. The second point is introduction of non-executive chairperson for nationalized banks, which brings accountability. Now the third point is key leadership positions are through market-based recruitment, which ensures merit-driven appointment, which is really very important. Last but not the least is the initiative have been taken by public sector banks so that they can take a better decision and they can come up with a better leadership. Second point, which is resulting in increase in profits of the bank, is capital strengthening. We know that as per BIS or Basel norms, bank should maintain a capital adequacy ratio of 9% or I would say 8% as per Basel norm, but in India RBI asked the banks to maintain it 9%. But if you see current scenario of the Indian banks, especially the public sector banks, the average capital adequacy ratio of these banks is even more than 50%, 15%, which shows capital strength, which shows huge capital with respect to the risk weighted asset, which undoubtedly strengthen the bank, and this strength helps the bank to grow and mitigate the risk, which increase not only the profit probabilities, but it also increase the development of the bank over the period of time. Public sector bank have successfully enhanced shareholders value, distributing, this is very important, distributing around 61,000 crore rupees in the last 3 years to its shareholders. So we know that dividend basically means the company's profit after tax is shared to its shareholders equivalent to the share value, that is basically termed as dividend. Now the question is, sir, why we have witnessed improvement in the asset quality of the bank? So the asset quality of the bank has been improved over the period of time. First reason behind this improvement is decline in NPA. Before I move on to NPA, whenever we talk about bank's capital, as per Basel III, bank's capital is divided into tier 1 capital, second is additional tier 1 capital, and the third is tier 2 capital. But generally we say bank's capital is divided into two tiers, tier 1 and tier 2. Basically, what is capital? Capital is the amount which you invest to run a business. For example, if you start a new company, and the amount which you are going to invest to run a business is known as your capital. Now, from where you raise the capital? So either you invest from your pocket because you are the owner of the company, or you borrow from the bank, or maybe you borrow from the public through debt instruments like bonds, debentures, bills, or you issue the equity shares, you issue the preference shares. All the amount which you are going to accumulate with the help of equity shares, preference shares, debt instruments, they all are going to be utilized to run a business, that is known as capital. So that bank's capital is categorized in this manner. In tier 1 capital, we include the core capital of the bank. Core capital means we include the equity shares, or I would say the capital raised from equity shares. We include the reserves of the bank, or I would say disclosed reserves of the bank. Along with that, we include premium which the bank has earned by issuing the equity shares. In tier 2 capital, we include majorly the capital which is raised from debt instruments or subordinated debt instruments. Along with that, we include the premium which a bank earns from these debt instruments. Then we have the reserves or general reserve to counter the general losses. Even we have the undisclosed reserves which are included under tier 2 capital. In additional tier 1 capital, we include the perpetual instruments. Perpetual instruments basically means the instruments which are valid till infinity. For example, if a preference share is issued and the preference share which is not going to be redeemed in the near future, and that preference share will earn you return till the company survives, that is known as perpetual share, or maybe issued for 99 years. So those instruments which are issued for very long term, they are not going to be redeemed, whether they are preference shares or they are debt instruments, they are included in the category of additional tier 1 capital. Now, according to BIS, bank should maintain capital adequacy ratio that is going to be 8%, out of which 2% is going to be maintained from tier 2 capital, and rest 6% is going to be maintained from tier 1 capital. This 6% is further divided 4.5% and 1.5%, 1.5% is additional tier 1 and 4.5% is tier 1 capital. This is how the reserves are going to be, or this is how the calculation is going to be done. Is it clear, everyone? Is it clear? Shall I move ahead? Rathod has asked this question. If it is clear, Rathod, and to the others as well, that what is the difference between tier 1, tier 2 capital, or for the very first time, if you have understood what actually the capital is, just give me yes sir in the comment section so that you can identify the answers in the comments in the question itself. So the decline in NPA. Now we have a content which is very important. Gross NPA have seen a sharp decline. This is important. Gross NPA has seen a sharp decline, where the recorded gross NPA was 3.12% in September 2024, which was 14.58% in March 2018. If I talk about net NPA, so net NPA is below 1%. 3.1% of what? So 3.12% of the total loan is gross NPA, and less than 1% of the total loan is declared as net NPA, which means that yes, the NPA conditions of the bank is improving over the period of time. Next point, we have intervention leading to success. Intervention leading to success means this success has been driven by targeted interventions, which include rigorous recoveries of the defaulted loan, which is interference was done by RBI, even the government, for which NARCL was set up. If you remember, National Asset Reconstruction Company Limited. Before that, if you remember, PARA was set up for the public sector banks specifically, so that the reconstruction and recovery of the public sector banks NPA can be done. Improved underwriting standards, which will ensure better loan approvals and substantial write-off of legacy bad loans to clean up the balance sheet. So these are the rigorous, I would say, initiatives which have been taken, targeted interventions which have been taken, which has improved the overall asset quality of the bank. But remember that, guys, writing off loan is not something which is technically correct. Technically correct, what I mean to say is, writing off basically means when bank from its profit delete or remove the stressed asset or remove the NPA values from the balance sheet just to clean up its balance sheet is known as writing off. So writing off doesn't mean that the loan has been recovered. It basically means the loan has been compensated from the profit which you have earned from some other source by the bank itself. So writing off is not good, but yes, it helps the bank to clean up its balance sheet. Moving on to the third point. The third point says role of asset quality review. We know that RBI has introduced asset quality review when RBI has asked the banks to present openly their NPA data, that what is the current NPA data of the banks, where banks share its gross NPA data as well as net NPA data. So this asset quality review, which was made open and transparent, has somehow push the banks to improve their NPA conditions to do much better in the near future. So this is very important, that the asset quality review initiative was taken by RBI, that too back in 2015, which is basically the banks were asked by RBI to share their asset quality data with the public openly, which pushed the banks to improve its data, which has resulted in decline in NPAs over the period of time. Now, last point is credit growth across key sectors. So public sector banks, these are one of the, I would say in this manner that banking sector is one of the important segment of the economy. It's one of the important pillar of the Indian economy, or for that matter, every economy all around the globe. But public sector banks, they are more important when we talk about the Indian economy, especially the key sectors, because they have provided huge credit to the key sectors. They are the one who are providing, along with priority sector lending, they are also implementing different schemes of the government to promote, stabilize and let the economy grow by focusing the key sectors as well. So sectoral credit growth has been very important, where we have witnessed that retail customers, that is driving consumption led growth, has been increased. Micro, small, medium enterprises lending done by public sector bank has increased, and infrastructure project lending has also increased over the period of time. Secondly, public sector banks, they are focusing on green finance as well as environmental, social and governance focused lending, which is improving the overall scenario of the economy. Moving on to the last segment. I hope you remember that in 2020-21 or in the 2021-22 budget, these were the two financial years budget where we were expecting that government is going to announce the merger of the public sector banks because the banks were not doing well. Then in 2020-21, the world economy, or I would say the entire globe, was struck by COVID-19 and the talks were faded related to the public sector bank mergers. But now it has been very clearly mentioned that public sector banks, they are doing pretty well and there are no plans to merge the public sector banks further. So this statement has been recently made. Pankaj Chaudhary, who is he? Minister of State for Finance, has clearly informed the Rajya Sabha that government has no plans of merging the public sector banks in the near future because the banks are doing well. They are performing at good economies of scale and there is a uniform improvement in the bank's operation. Last year, highest profit was recorded by the public sector banks, which is 1.46 lakh crore, and this financial year we are expecting more than the same which was witnessed in the last year's balance sheet. So these are the reasons that yes, we can expect, or we can say that there is pretty less possibility that the public sector banks will be merged further in the near future. Now, if the question is asked, write a short note on merger of the banks. So when you will be discussing the merger of the banks, why the merger is done, how the merger is done, how approvals are given, what all approvals are required, what were the mergers done in the past few years, then you can add this, that as per the latest statement given by the Minister of Finance, that yes, there are pretty less chances that the public sector banks will be merged further in the near future. So this is how you need to identify that what content from which news is important for you and it can be included in which answer to score pretty good marks in the, especially pretty good marks in the subjective section itself. As I have clearly mentioned and we have discussed the plan, the entire plan is, I'll just give you. See, you will be having your general current affairs. General current affairs means latest appointments, latest awards, sports related news, defense related news, latest MOUs which have been signed by the country, n number of national and international awards, national and international appointments. These sessions will be taken in the morning on regular basis by Pushpak Sir. Then this is going to be on daily basis, I guess 5 days a week. Then ESI related current affairs, that is important schemes, important social issues which are presented in PIB, will be taken by your favorite Manish Sir, and he will be taking this Monday, Wednesday and Friday. Left out part, that is the finance current affairs, which include RBI current affairs as well as general finance current affairs, will be discussed by me on Tuesday, Thursday and Saturday. This is going to be 5 p.m. This is going to be 5 p.m. and this is going to be 9 a.m. This is what you need to follow. That is it. Is it clear, everyone, now? Is it clear? So this is the schedule which you were asking me. I have given you the entire schedule which you need to follow in order to cover your entire current affairs part. Moving on to the next part. The next point is, sir, key pillars of Indian economic growth is the public sector bank. And in this, we know that strategic partners in the India's growth, that means India is relying a lot for its growth on the public sector banks participation. So I have taken up a new initiative for you guys. The initiative is, after completing the entire news in detail, I have come up with this tabular format. This is the concise news which we have just discussed. So this is what you need to learn and this is what you need to understand. Are you getting my point? Are you getting my point? So last class there was some conflict that, sir, you should discuss the news in detail, so you should not discuss the news in much detail. So in order to avoid that problem, in order to avoid that conflict, I have come up with a new initiative and I'm pretty sure that you must enjoy this. The new initiative is, first I'll discuss the entire news in detail and in the end I'll give you a tabular format where we have the concise news of the day. So what is the news? The news is public sector bank profit has increased by 26% in the first half of the financial year, which is recorded 85,000 crore rupees, which was earlier 68,000 crores. Gross NPA 3.12% and net NPA is below 1%. If I talk about the highest profit last year was 1.4 lakh crore rupees. What is the capital adequacy ratio or capital to risk weighted asset ratio for the public sector banks? So it is 15.43%, where the minimum is 11.5. So how this minimum is calculated? 9% of CAR, 2.5% of capital conservation buffer. So minimum is 11.5, where the average is 15.43%. This is the important data. Then return on assets, that means the return on asset means the return on assets of the bank is around 1.4%. Return on equity is 14.6%. Dividend distributed is around 60,000 crore in last 3 years. Digital fraud losses is recorded around 11,000 crore rupees. Then we have RBI has introduced 4 R's. 4 R means recognition, recapitalization, resolution and reforms. Year on year credit growth of the scheduled commercial bank is 12.4%. Year on year deposit growth is 11.6%. Reserve Bank's initiative asset quality review in 2015 has played a very important role. Global and national ranking has been, I would say, enhanced. The banking stability has enhanced over the period of time, and we have achieved the twin balance sheet advantages. The way we have twin balance sheet problem, now we have witnessed a twin balance sheet advantage as well. Got it, guys? This is all about the second news. Moving on to the third news. Managing Director and CEO of J&K Bank has been appointed recently. So if I talk about this, the answer to this particular question is Amitav Chatterjee. Amitav Chatterjee is appointed. Amitav Chatterjee is appointed as the new Managing Director and CEO of J&K Bank for 3 years, and he will be starting his position from 30th of December 2024. Second point is Jammu and Kashmir Bank share has witnessed a jump around 7.4% after this announcement was done. So this announcement was really very important because it has led to the increase in share price. This has led to the increase in share price of Jammu and Kashmir Bank. Third point is Reserve Bank of India has approved the appointment, and he is going to replace whom? Sir, he is going to replace Baldev Prakash, who is going to complete his tenure on 27th of December 2024, and he will be replaced by Amitav Chatterjee on 30th of December 2024. Remember that this appointment has been done by RBI. First, the appointment is done, or the name is finalized by the board of directors of the bank. The name is then given to RBI. Once RBI approve it, then finally the appointment is done. So RBI has made this approval under Section 35 of RBI of Banking Regulation Act 1949, where RBI has the power to approve the appointment of the heads of the banks. So he will receive a fixed pay of 1.40 crore annually, and he is having a target of 1.4 crore variable pay as well. If I talk about the transition plan, in case of any delay in assuming the office, then the J&K Bank will be appointing an interim CEO. If I talk about Amitav Chatterjee, he has a 33 years of experience in the banking sector. Most importantly, he is serving as Managing Director at State Bank of India. So he's the Deputy Managing Director of State Bank of India, and even he has served as the Managing Director and CEO of SBI Caps. So these are the two important things which you need to remember. Amitav Chatterjee is currently serving as what, sir? He is currently serving as Deputy Managing Director at SBI, and he has also served as Managing Director and CEO of SBI Caps. Last but not the least is J&K Bank was established back in 1938, and it is one of the major player in the banking sector. It has its major operations in J&K and Ladakh. Last but not the least is it is a universal bank. What is a universal bank? So the bank which is involved in n number of, I would say, which is involved in n number of operations, which include retail operations, commercial operations, corporate operations, wholesale banking, retail banking, everything is included under the category of universal banking. So we have SBI, example of universal bank, PNB is an example of universal bank, ICICI, they all are the examples of universal banks. Along with this appointment, this list of appointment is also very important, which include Secretary General of World Agriculture Forum. This appointment was done in November. FICCI President was appointed in November. The name is Harshvardhan Agarwal. Comptroller and Auditor General of India is appointed. The name is K. Sanjay Murthy. Then we have Managing Director and CEO of Indian Bank. The name is Binod Kumar. This name is important. Managing Director and CEO of SBI Funds Management Limited, Nand Kishore. This name is important. 11th President of the Asian Development Bank is important. The name is M. Kanda. And lastly, Managing Director and CEO of IFCI is important, and the name is Rahul Bhave. So these are the important appointments which have been done in the recent month. So this is how, with one news, you have covered 7 more appointments. So in total 8 appointments were covered in last 5 minutes. I hope this is going to be important. So moving on to the next news, India to India, $500 million. Before I discuss this, in the previous session, we talked about Asian Development Bank. If you remember, Asian Development Bank has signed an agreement of $72 million of loan for what purpose? For the coastal protection in Maharashtra. Remember this? Coming back to the news. The news says India to lend $500 million to India for sustainable infrastructure. Please pay attention. This is very important. Government of India has announced in the recent updates that Asian Development Bank has partnered with Government of India, or I would say Government of India has partnered with Asian Development Bank in order to provide loan facility to Indian organizations for sustainable development, which means Government of India has recently partnered with Asian Development Bank to enhance sustainable infrastructure. The agreement involves substantial loan of $500 million, which is basically going to encourage environmental friendly projects in the country. So the guarantee ensures that funds will be effectively utilized and channelized. So these funds are going to be effectively utilized and channelized by which organization? That is IIFCL, which stands for India Infrastructure Finance Company Limited. Before we discuss this news in much detail, let's try to understand what is this India Infrastructure Finance Company Limited. Sir, India Infrastructure Finance Company Limited was incorporated in 2006 by Government of India, and the objective behind setting up this particular company was to provide long-term loans to the finance infrastructure projects. So in order to provide long-term loans for the infrastructure projects, this organization has been incorporated. The purpose was IIFCL. Basically, it was set up to finance. Those infrastructure projects which has long gestation period. Gestation period basically means long time period to complete the projects. Along with that, those projects which are not maybe economically valuable but which are not maybe financially valuable, but they are economically or in terms of economic growth, they are really very important. So those projects are going to be funded by this organization. So what is done? So Government of India will provide loan to IIFCL, and IIFCL will provide loan to different projects in the country, especially the infrastructure projects, or I would say especially the sustainable infrastructure projects. Financial assistance, IIFCL offers financial assistance through two primary mechanisms. It can provide direct loan. It can provide direct loan to the companies which are completing or which are involved in the projects. Even this organization can provide loan to the banks, and banks can provide loan to the infrastructure building company. What I'm trying to say, refinance. What is refinance? I'll take a very simple example. When you were a kid and you want to go out with your friends to watch a movie and you need, let's say, 500 rupees. Now in that particular scenario, you cannot ask 500 rupees from your father, but you will be asking the same from your mother. But if your mother is a homemaker, she is not earning, then she will be taking that funds from your father and giving it to you. In your eyes, who is the financer? Mother. But actually, who is the financer? Father. So father is financing the financer. That means when public borrow funds from the bank, for public, bank is the financer. For public, bank is the financer. But if bank is further financed by an organization, that organization is known as refinancing agency, which is financing the financer of the public. Now, what is going to be the source of funds? So, source of funds is IIFCL raises the funds both from domestic as well as international market, and they also leverage government guarantees to secure the investment. If I talk about the government ownership, so this company is wholly owned by Government of India, which basically helps the government to provide loan for the infrastructure projects in the country. What kind of projects are funded by IIFCL? So the projects related to transportation, energy, water, sanitation, communication, social infrastructure, and commercial infrastructure projects are basically funded by IIFCL. Registration as NBFC, remember that IIFCL is registered as a non-banking financial company and it is operating under Section 45 of RBI Act 1934. It is regulated undoubtedly by Reserve Bank of India. Moving to the last point. The last point is, in this particular news, IIFCL is going to play a really very important role, because IIFCL will be receiving the funds from the government, and those funds will be provided as a loan to the infrastructure construction companies, so that sustainable infrastructure growth and development can be witnessed in the country. And to provide this loan to IIFCL, Government of India has signed an agreement with ADB. So first, Government of India has signed an agreement with ADB, and then the loan which has been received by Indian government will be provided to the Indian company, that is IIFCL. From that IIFCL, it will be circulated in the economy as a loan for funding, for supporting, for financing what? For financing the sustainable infrastructure projects in the country, that is India. Got it, guys? Clear? Sure. Moving on to the last news of the day. The last news basically talks about the ADB's role in this particular aspect. So not only ADB role in this, but ADB is the Asian Development Bank of the country, and through n number of initiatives by ADB, it is undoubtedly supporting and promoting the economy of India, not only India, but of the Asian countries as well as the developing countries of the world. Now guys, if you're preparing for RBI Grade B examination, then I would say this is the right time to start your preparation, where you need a structured study plan, live classes, so that you must have clarity about all the concepts related to finance, management, economics, social issues, quantitative aptitude, reasoning, English, and most importantly, general awareness. For this, we have a batch for you. This is a subscription. If you subscribe to this batch today, with the help of a code, that is MADHAV. Use this code MADHAV in order to enjoy maximum discount. And remember that guys, if you use this code today and New Year's sale is going on, you will be able to access this batch for 18 months, and that too for only 7,499 rupees. So this is the best opportunity. This is the best time to subscribe to this particular course in order to ensure your selection in the upcoming examination as well, where we are going to provide you 550 plus live classes, more than the recorded classes which are provided by different platforms. We are providing you 550 plus live classes, and each class is going to be of 60 minutes. That means huge volume of content is going to be delivered. We'll provide you with 220 plus mock tests, one-on-one mentorship where you can connect with me over an video call and you can ask all your doubts. Lastly, descriptive answer writing. The way you type the answers in your final phase 2 examination in a similar manner, we will be providing you a platform where you will be typing the answers live while attempting your mock test, which gives you the actual feel of the examination but before the exam. So this is a must join platform. Trust me, if you want to clear your RBI Grade B examination, this should be your one-stop solution for your RBI Grade B exam. So that will be all from my side. Last class also, many of you were asking from where you can download the PDF. My PDF is available on this Telegram channel. You can join this Telegram channel. Handle is @Madhav. Just take a screenshot or just scan this QR code. You will land on my Telegram channel and I will be adding the PDF in next 10 minutes. Thank you so much for joining, guys. We'll catch you in the next session. Good luck. God bless you. Take care. Bye-bye. See you soon. Bye, guys.